Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just an hour away, here's what you need to know. Nvidia surges past $1,000 post-market after a bullish sales forecast underlines the enduring strength of the AI boom. We'll break down the numbers. Fed minutes show policymakers rallying around the higher-for-longer view on rates. We'll speak to Kencel of Churchill Asset Management later in the show. Plus, the UK Prime Minister hopes for brighter days ahead as he calls a surprise summer general election. Don't miss our conversations with Kelly Beaver of Ipsos UK and former Bank of England MPC member Michael Saunders.
Meanwhile, a quick check on these markets here. If you look at the futures action, most of it is happening in the Nasdaq 100. A real reaction overnight to the Nvidia story, up almost 1% on this overnight session. Eurostoxx 50 futures catching some of that green on screen as well, higher by 0.3%. But the underperformer is the FTSE 100. We're going to dive into those election dynamics there and its impact on perhaps the bond market, even the FX market. Cable 127.23. Markets today starts right now.
Thursday, the 23rd. Good morning, folks. If you're just sitting down at your desk, you have a question that you have to answer this morning. Which one are you going to focus on? Is it Nvidia, a massive aftermarket rally, really solid numbers? Jensen Huang talking about the idea of a new industrial revolution. He says he is super excited about that. Or is it the focus on the Fed and the much more hawkish minutes that we got yesterday, which seemed to stand in stark contrast to the latest commentary we've had from Jay Powell? Various participants willing to tighten more if needed. Tighten more if needed. Many uncertain about the degree of restrictiveness. Which one of those two factors is going to turn out to be the most important when it comes to today's session? I don't think we know the answer yet. It's going to be one of them.
Yeah, I mean, looking at futures, US futures, the Nasdaq futures up by 0.9%. The focus on tech, the focus on Nvidia, very clear to see. And it seems the market taking its cues from that. But so much for the air pocket when it comes to Nvidia. We talked about this to our guests, didn't we, yesterday? There was a lot of concern. Would there be this gap in the revenue story?
Yeah.
Not so much.
Well, some of these numbers, 262% gains, 427% in data center alone on a year-over-year basis. But the one that caught my eye, in addition to the 10-for-1 stock split, was that 45% of that revenue comes from just four names, the hyperscalers that you were talking about, Anna. How does that mean then for the diversity story? Or is this, at the end of the day, just your most liquid names piling more liquidity into your newest liquid name?
Various participants are willing to tighten policy more if needed.
Various. It used to be many and few.
Now it's various. Sounds like a few, doesn't it? It sounds like maybe more than a few.
I'm not sure how various stacks up with few.
Torsten Stock put it really nicely in one of his notes. This feels very different to the narrative that we've had from Jay Powell, and it certainly caught the market on the hop, I think, yesterday in terms of just how hawkish these minutes were. Yeah,
maybe we'd focused too much on that comfort from Jerome Powell, and then we got something different from that broader Fed minutes when they hit. Let's pivot to the other big story in this part of the world, and that's UK politics. UK Prime Minister Rishi Sunak has set the date for a surprise summer general election on July the 4th. It gives his Conservative Party 6 weeks to overcome a poll lead, of course, for the opposition Labour Party, averaging more than 20 points. We're joined now by Lizzie Burden, our UK correspondent, who is in Westminster. Lizzie, plenty of theories as to why he decided to go for this date. Unfortunate optics very much around the announcement with all that rain and the competition with the soundtrack from protesters. But why do we think then that he's going for this snap election?
Well, indeed, Anna, he was absolutely drenched as he made that speech in Downing Street yesterday. I was there and it was difficult to hear him because he was drowned out by Labour's old victory anthem, "Things can only get better." But the UK papers this morning are joking things could only get wetter for the Prime Minister. July the 4th is the date he's picked. He's put a pin in all the speculation of when it's going to be and who's going to lead the Conservatives into it. But why has he picked July the 4th? Well, first of all, it's no coincidence that yesterday was the day inflation fell to 2.3%. For Rishi Sunak, that means it's back to normal, although in the eyes of the markets, as we said yesterday, it's so sticky that they don't think a June rate cut is possible anymore. But there are also fiscal reasons. The latest finances data suggests that there isn't wriggle room for more tax cuts before the autumn election that many were expecting, including the Chancellor himself, it seems. He seems to have been caught off guard by this announcement as well. But the other thing, of course, is the poll lead, and Labour's gap over the Conservatives was only growing. So it seems that Rishi Sunak, uncharacteristically for him, has decided to take a gamble and roll the dice on a snap election.
Lizzie, connect the dots for us here. How does this all impact the Bank of England at a time when it feels like the bond market, the FX market, isn't really reacting to this news? Is there a read-through into monetary policy?
Yeah, the optics are inescapable, because if the Bank of England cuts in June, it looks like the old lady of Threadneedle Street's given a helping hand to Rishi Sunak. But you could argue it the other way, couldn't you? That if they cut after the general election, if, as the polls suggest, Labour gets in, that the Bank of England would be helping the Labour Party. Put it aside for a moment, because of course central bankers tell us they're independent of politics, they're data dependent, and the pricing yesterday suggested that June was off the table anyway because of the stickiness of inflation. I'm going to be speaking to Michael Saunders, the former Bank of England policymaker, later in the programme. He'll be here with me at 8:30 a.m. on the Green, and I'm sure we'll also discuss the economic policies of both parties. Both of them really focused on growth, but Rishi Sunak struggling to take credit for inflation coming down on his watch and the tax cuts that they've already put in place.
Lizzie, thanks very much. Bloomberg's Lizzie Burden with the update from Westminster. We'll be there on the ground with plenty of coverage as we get you set for the election campaign that is to follow. Be sure to stay with us for a special episode of Bloomberg's Votonomics podcast, in fact, analysing the Prime Minister's decision. That's available now wherever you get your podcasts. We will, as I say, also be on the Green and covering this UK politics story here from the studio as well. So we'll have UK election coverage. We'll speak to Kelly Beaver, the CEO of Ipsos UK and Ireland, and Michael Saunders, as Lizzie was saying, former Bank of England MPC member, will be with her on the Green.
Anna, we're often told that context is important, certainly here at Bloomberg. So I just want to, before we get into our next conversation, I just want to spend a moment talking about jet engines. Yep, you heard me, jet engines. If you look at what is happening in the narrow-body market, the low-cost market here in Europe, there are two main issues that are currently hitting that sector very, very hard. It is well documented that Boeing is having problems with its 737 MAX. However, there's another issue which has been hitting this industry very hard as well, and that affects Airbus aircraft. Not all Airbus aircraft, but some Airbus aircraft, and it concerns the RTX Pratt & Whitney geared turbofan engine. Now, if you buy an A320 today, you are given two engine options. You can either buy the CFM, which EasyJet bought, or you can buy the jet engine that comes from RTX. And that latter engine has been having major problems, which has been hitting our next guest very, very hard. And that is Joseph Verardi. He is the CEO of WizzAir. His engines are RTX engines, and they're having a major impact on his ability to provide capacity to the market. Joseph's with us this morning. You've got numbers out this morning. Top line looks pretty much in line with expectations. Net income, you've beaten there. But this is a carrier that at the moment is in some ways in survival mode as you try and manage through this Pratt & Whitney engine issue. How hard is it hitting you right now? When is the peak of this problem going to manifest itself? And when are you going to start preparing for the kind of the growth phase when all the engines are back?
No, absolutely. I mean, this is a significant issue we have been dealing with, and we'll continue to deal with it in the next few years. So this is not something you can resolve overnight. Good news, we are going to receive the first engine with no problems, clean of all of these issues as of next month. And from there on, the situation will start improving. So we are probably peaking on the problem as we speak. By the time we're going to be completing the whole cycle of inspections, it's another 2 years to go, roughly speaking. But now we will start seeing some improvement. So this issue has been dragging us over the last 6 to 12 months, but now we are starting the sign of recovery, and I think we're going to get better going from here.
OK. How many engines have you got out now? When you get them all back, how much extra capacity are you going to have, and what are you going to do with that capacity? We need to start thinking about next year and what you're going to do with the business then.
Yeah. Maybe the best way to look at this, today we are a 200 aircraft airline, 209 precisely. 3 years from now, we're going to be more than 300 aircraft. Some of our aircraft are grounded as we speak. We have 47 aircraft on the ground right now. Those will be recovered completely within the course of the next 2 years or so. So we will be back into growth of around 25–30% a year after this year. So it's going to be a bit of a roller coaster. So right now we are flat on capacity, we are protecting it. But in the next 2 years, you're going to be seeing growth in excess of 20-25%.
Joseph, good morning. Have you been losing market share there in some places as a result of this? And if so, are you confident that you can get some of that back with the capacity plan that you describe?
I think I just said it, that effectively we are protected by all the supply chain issues because we are unable to run at the moment, but no one else is able to run because they all have their own problems. So I think it's rather like status quo in the market. So we are not losing market share. We are protecting capacity. We are flying exactly the same number of seats this year as last year. So with that regard, we are fine.
Yeah.
But most importantly, now we need to look at the future because growth is coming. We need to start setting ourselves up for that from a market standpoint, recruiting pilots and cabin crew to make sure that we're going to be able to deliver it.
What can you tell us about pricing? We spoke to the EasyJet boss recently, and he was saying it's too soon, really, to say too much about the pricing outlook for the summer. What are you seeing?
Yeah, first of all, we are seeing a very robust market out there. We are operating across geographies in Western Europe, in Central and Eastern Europe, in the Middle East, and we are seeing a very consistent picture. The consumer is fine, demand is fine, the market is fine, there are no issues. Now, the problem some of the airlines have that they overcharged the consumer last year, and they cannot just keep doing it every year. So, of course, there is a plateau to it, but WizzAir is in the cost business. We are very much focused on unit cost to make sure that we are actually lowering our cost of operations. We are in the business of commodities. In commodities, lowest cost prevails. This is what we are focused on, and we are very happy with the pricing environment we are seeing out there.
Talk to us a little bit about some of the kind of black swan events that we're watching. WizzJet has still been operating in Israel, for example. If that conflict escalates, are you prepared to gain or deploy or get that market share back in other parts of the world?
I think we are prepared for everything by now. I mean, going through the last 3 to 4 years, one of the things we certainly have learned how to deal with black swan events because we have had a lot of them. With regard to reshuffling capacity when there is a conflict or there is, any big issues affecting the business, we have learned how to do that. We are a very flexible organization. Simply what you do is that you play according to market, you play according to the situation. So if you are contained with regard to flying, you just move capacity over to somewhere else. Let's not forget that we have a huge network footprint by now. We are operating to 100 countries. We have options to go for when we have to do that.
Talk to us a little bit as well about labor issues. That seems to come up every summer in terms of capacity at airports, in terms of negotiations with flight attendants, pilots, etc. Your visibility on the labor story.
Again, we are good. I mean, let's not forget that we are structurally a growth business. We are growing the company. As a result of that, we continue to create career opportunities for our people. You may be a pilot, you may be a cabin attendant, you may be in a managerial role. So people come to work for Wizz, on the one hand for the spirit of the business, but also for the career opportunities that growth continues to create. So we are very attractive to the market. We actually never had labor issues ourselves. We have been dealing with labor issues of others,
right.
But I think the situation is a lot better this year than what it was last year.
Why are supply chain issues still hitting this industry as hard as they are? How long are they going to last? You talk to the OEMs, Airbus and Boeing, they still talk about their supply chains. They still talk about problems. We're years from the pandemic. They haven't resolved it. How long is it going to hit this issue? How long can we expect capacity problems? How long can we expect that to impact fares?
Personally, I think supply chain issues will affect the operations of the industry over the next 3 to 5 years. Again, this is not something you can fix overnight. And if you look at the root causes of these supply chain issues, I think they are twofold. One, the whole industry has been structurally growing a lot more than it was expected. And two, COVID was such a big hit and such a setback for the whole setup that the industry is still recovering from that in terms of getting labor back into work, get focused on some of the issues which you let go during the COVID times. And this is a very robust industry. It takes time to move again. I think it's years still out there.
All right, Joseph Varadi, the CEO of WizzAir, joining us this morning on set, talking about a variety of issues from the supply chain story to the labor story. We thank you so much for joining the program. Let's set your agenda for what's ahead today as well, because there's plenty of things to digest in addition to the macro and the micro that we got in the last 24 hours. 9 a.m. London time, those euro area PMIs, the inflation story, of course, still in focus. How are the French, Italian, Spanish economies doing? How does that really square with the rest of what we're seeing? Plus, of course, that data continues. 1:30 p.m. London time, those initial jobless claims, the labor market story in the States, still very much catching my eye, at least at 1:30 p.m. time. But of course, the fiscal policy matters as well, and that's where the G7 finance chiefs and central bankers story matters. They're meeting in Italy. I believe Oliver Crook on the scene will be covering that story for us over the next couple of days, as we also monitor plenty of central banks speak from both sides of the Atlantic.
There's a lot to talk about then. Eurozone PMIs of interest, expecting a slight tick up, not sort of stunning moves, but we are expecting a little bit more positivity on manufacturing, but still well below 50, but trying to underscore that have we turned a corner on European growth story.
Be interesting, though, because we're in an environment where you do wonder how much anticipation there is of rate cuts already built into the system. When it comes to the European economy, it was really interesting. I think we were talking to the boss of SEB the other day. He was talking about how Sweden, which is a big manufacturing economy, will recover relatively quickly once rates start to come down. And I wonder how much of that's already factored in and will be kind of playing a part in the numbers we're already seeing coming out in terms of the PMIs.
Yes, and I wonder how much the G7 finance ministers will be counting on that happening because we have their meeting. I know the IMF wants them to focus on debt, but our story, our coverage suggests that that's not really what they want to look at. They don't want to think about that. They'd rather think about what the private sector can do if rates come down, perhaps.
Well, it feels like the focus is slowly turning from let's navigate the monetary policy environment. What is the BOE going to do next? What's the Fed going to do next? Which, by the way, nobody seems to have any idea. The division outside of the markets and within some of these central bank policymakers is equally ambivalent. I think the focus is turning onto fiscal, isn't it? It's turning onto fiscal here in the UK. We're waiting for the manifesto from what a Labor government might actually look like. We're waiting from the fiscal out of the States as well. What does the next 12 months out of the States look like in terms of spending, plus the deficit story? But it's also a story you're seeing in Spain, Italy, France as well. How much is fiscal now driving the conversation as opposed to the monetary?
Yeah. Back to the political economy. It seems to be something we focus on increasingly. Let's tell you what's coming up on the programme then. We're going to get reaction to the UK election being called with Kelly Beaver, the CEO of Ipsos UK and Ireland. We'll also be hearing from Michael Saunders, former Bank of England MPC member. He'll be on the green with Lizzie, so stay with us for that. Plus, BHP wins an extra week to convince Anglo-American shareholders on its $49 billion takeover plan. We'll get the latest there. If you have any questions, please do get in touch. We'd like to hear from you. IB Plus BBTV Go is the function to use if you want to get in touch with the team that puts together this programme. This is Bloomberg.
The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
The Nvidia CEO, Jensen Huang, speaking on the earnings call. Blockbuster earnings delivered once again by Nvidia. The real question is, how long can they keep up with this pace? And in some ways, Jensen Huang answered that question yesterday, talking about another wave coming as they move into the Blackwell phase of the next chips. So can it be sustained? Is this something that can carry on? Let's try and answer that question. Matt Bloxham from Bloomberg Intelligence joins us now. He said he's excited. He talked about a new wave. Is this sustainable?
I think certainly for the next, kind of 12 months so it is. And then we heard that, they see into next year demand outstripping supply from all their various customer groups. So I think in the near term that gives confidence that revenue growth coming. As you said, the Blackwell chips will come in to data centres by the end of their fiscal year. They're more expensive. They're not seeing any slowdown in demand for the current generation of chips. So I think at the moment the kind of combination of factors is very encouraging for them. And we're seeing all their biggest customers, the hyperscalers, increasing capital spending this year explicitly on AI platforms. So for now, encouraging, where the AI revolution goes in 2025 and beyond is still a big question mark. It could go down very many routes, and that will really kind of shape the market midterm. But for now, Nvidia is the leader, and I think that their revenue outlook's looking pretty robust.
Given the drive into AI and the investment in Nvidia is driven, to your point, by the richest rich of the entire world, the 4 richest companies in the world, what impedes that, especially when Nvidia is trying to diversify? Not much near term. I think obviously that some of these biggest players, they don't want to be so dependent on Nvidia, so they're developing their own chips, and so there's a bit of kind of competitive tension there. But they're doing 2 things. If you look at someone like Google, part of the money they're spending is on training their own models to evolve their own search product. But they also have a massive data center business, which is essentially providing wholesale capacity for enterprise customers, and those customers want the Nvidia platform more than they want maybe Google's chip. So I think there's they're buying technology for different, or developing technology for different reasons. I think right now that kind of balance is kind of still play into Nvidia's hands, really.
Matt, can I ask you about the velocity of new product innovation coming through from Nvidia? Because there's Blackwell, that's coming, and that's the excitement of the moment. But they said yesterday, newsflash, there'll be another one after Blackwell, so we know that. And it seems as if they're trying to shorten the period that it takes to innovate with a new product from 2 years down to 1. Some people worry about, then, to Kriti's point, the customer's return on investment. You're going to spend a lot, and are you going to be behind the curve within a year? But when we spoke to a guest yesterday who said some of these products, they pay back in a day and a half. That was a very specific case she was giving. But, what are your thoughts on this velocity and the dangers and the upsides?
Yeah, I mean, it's true, because I think even on the call yesterday, the CEO gave an example of, you spend $1 on Nvidia technology and you generate $5 in revenue from your customers, over a period of years. So, I think there is a very good payback on this technology right now. I think to some extent, that kind of 1-year technology upgrade cycle that they talked about yesterday is almost like maintaining their technology moat against the likes of AMD or even Google and Amazon and Apple, that, you're building your own chips, but, we are already 1 or 2 steps ahead of you, and we're going to maintain that lead. And so if you're really wanting to do the kind of super advanced stuff, you're going to have to come to us. And we know Google, we know Meta, that you're competing with each other in the search space, for example, and you need to be finding the latest technology to keep ahead of your rivals. And so you will keep coming to us because we are really innovating every year.
At the moment, the ability of these chips to do incredible things is driving the kind of technology and driving the Nvidia story. Power consumption looks like it's going to become an increasingly greater and greater issue. How much of a focus will shift to the ability of these chips to do what they do, but with less power?
Yeah, I mean, I think that's already a massive issue. We've been looking at that a lot within Bloomberg Intelligence, and some of my energy colleagues, for example, published research last week looking at this issue on some of the kind of traditional and kind of renewable power suppliers. Huge issue, because when you look at the analysis between the server density or the power density of the hyperscalers relative to kind of a regular data center, it's multiples higher, and that's just going to get bigger and bigger and bigger unless there is innovation in cooling and chip efficiency. And that's part of what the Blackwell chip is about. It's not just way more powerful, it does it in a more power efficient way, and that innovation needs to continue if we're not going to see a massive power crunch. You're already seeing energy providers around the world pausing planning permission for data centers because of this power issue.
All right, Matt Bloxham from Bloomberg Intelligence, we thank you so much for putting that into perspective for us. Coming up on the program, we'll go to one of our other top stories. UK Prime Minister Rishi Sunak gambling on a summer election. We're going to look at the latest polling with Kelly Beaver, CEO of Ipsos UK and Ireland. That conversation next. This is Bloomberg.
Now is the moment for Britain to choose its future. To decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty. Earlier today, I spoke with His Majesty the King to request the dissolution of Parliament. The King has granted this request, and we will have a general election on the 4th of July.
Our offer is to reset both our economy and our politics, so that they once again serve the interests of working people. We totally reject the Tory view that economic strength is somehow gifted from those at the top. Over the past 14 years, through all the crises we've had to face, sticking with that idea has left our country exposed, insecure, and unable to unlock the potential of every community.
UK Prime Minister Rishi Sunak and the leader of the opposition Labour Party here in the UK, Keir Starmer, both speaking yesterday as Rishi Sunak called a snap election. Let's talk about UK politics. Kelly Beaver joins us, CEO of Ipsos UK and Ireland. Kelly, nice to have you with us. Thank you so much for spending time with us here on Bloomberg TV. Can I ask you about the obvious questions around the poll lead that we see for for Keir Starmer at this point? There's one school of thought that says just don't overthink it, just look at that, and that tells you pretty much everything you need to know. Other commentators focus on the fact that Keir Starmer still needs a bigger swing than Tony Blair in '97 to pull off a victory this time around. Where's your focus?
So my focus is a mixture between above that voting intention poll at the level of the context of the overall mood of the nation and how it's feeling, and below it at some of the lower level indicators around how people feel about parties' policies. The voting intention number people get very hung up on, so we know from our most recent poll that the Conservatives are 21 points behind Labour. That is substantive by way of a gap. How's the mood of the nation? The mood of the nation, 3 and 4 say it's time for a change. 6 and 10 say that this country is heading in the wrong direction. That overarching mood music has been carrying for quite some time, and it fits with the voting intention poll that we're seeing, which is showing mostly a dissatisfaction with the current government. And then below the line, if you look below at some of those underlying issues, Keir Starmer is polling not brilliantly as a leader himself. He's on -18 by way of net satisfaction. But comparatively, and this is a comparative contest, Rishi Sunak is on -55. If you look at the issues that matter to the British population, similarly, Labour lead, not a strong lead on all of the key issues. On 2 of the ones that matter out of the top 4, Labour do have a commanding lead.
OK. And can I ask you about the role of the economy here, Kelly? Because what role is the economy going to play here? Do you sense that this is a time where the electorate goes to the polls thinking about the cost of living crisis that has been, or thinking about a quote-unquote normalisation in inflation? That's certainly what the Prime Minister called it yesterday. Is that the conversation, or is this just about regime change and about political cycles and about, you know, many, many years of Conservative rule?
So it's not going to be either or. There will be a myriad of things that are in the public's mind when they think about who they want to vote for. There is a strong desire for change at the time of an election, and that is undeniable, and it has been rising in the country. But on the economy, both the economy itself and the cost of living issues faced by people in this country are 2 of those top 4 issues that I alluded to earlier. So they are on the public's mind. They are watching out for change, and change in real terms in how it feels when they're looking at their own living conditions. So I think those things will matter. And what we've been tracking over a long period of time is economic optimism. Whether people think that the country's economic condition is going to get better, worse, or stay the same in the next 12 months. And we are a nation of economic pessimists. We generally think it's going to get worse. However, in the last month, we have seen a real improvement in that level of net pessimism in the UK. So it's now sitting at -4, which historically actually is relatively good. So perhaps there's some optimism feeding through to the public on the side of the economy.
That seems so British, doesn't it? That we are celebrating an improvement in net pessimism.
But please don't take it too far, because we don't want to become optimistic. Heaven forbid. Kelly, when we think about Tory voters and the switch that they may make, Tory voters in the past, are they going to be all going to Labour? How are the Lib Dems set up into this election? Where do the surprises come from?
So just firstly, on the voting intention, around half of the people telling us that they're going to vote are also telling us that they might change their minds. And so there's still a proportion of the population which are persuadable that are in the mix. And I think both Labour and Conservatives will be very focused on those. From the Conservative 2019 voters and where they go. So yes, some to Labour, some to Reform, who will be, or say they will be standing through the election, and then some as well to Lib Dems and a small amount to Greens. So it's not just a Labour show by way of where they are going. there are other smaller parties that have been picking up some of that voting intention. But voting intention versus real votes, those are two different things. And we've got 6 weeks to go in the run into this election, and you could see the vote consolidate around the larger parties.
OK. If we get it consolidating around the larger parties, I'm assuming that Labour is going to win a substantial majority. I'm trying to digest whether or not this is going to be that substantial majority, which would give the Labour Party the ability to push through the policies that it wants to deliver upon. But I'm wondering how big a majority we are looking at here. This is a key factor in terms of determining where policy is going to go next. Is your sense at the moment that that majority, that substantial majority, is there for the taking?
I think what we're going to see over the next 6 weeks, so there's a lot of chat about whether the lead that Labour have is going to soften, and ultimately whether the majority will not be commanding enough, and we could end up in a situation where we have coalitions being spoken about at some point 6 weeks down the line. And what we can see is that there is a soft element to the Labour vote. And so looking at that, you would anticipate that we would start to see some of the lead that they have carved out, that 21 points, start to soften as we move into the campaign momentum, and people start really thinking and weighing up, what do I really want from the next government? Now, how that pans out and how that works, we're going to be watching very closely, but I would expect it to soften. The question is, how much? And of course, the Labour camp are very cautious and very focused on protecting as much of that lead as they possibly can, with those persuadable voters, that sort of up to 50% who are saying they're undecided, they're not really 100% sure. And we know that there's not a huge sway of those who have a great love for Labour necessarily within those who have switched. It's just they can't see themselves voting for the Conservative Party as it stands today.
Kelly, as an outsider to UK politics, I think this is fascinating that even without any sort of manifesto or plan being laid out with Labour, people are still so convinced that they're going to be the next government in the UK. The core of that, though, seems to be public perception that the economy isn't improving. You mentioned this yourself. The cost of living story is still plaguing a lot of voters' minds. What changes that, though? What do they need to see to say, actually, things are better?
So, as I mentioned, economic optimism or a reduction in pessimism, we have started to see that feed through. It doesn't mean that it's not still a top-of-mind issue for the British public, but some of the other issues have started to move up into the fore, like concern around public services and the NHS. So, whilst they're starting to see some moves on the economy and cost of living, that just makes way for those other issues like public services and how well they can get access to the NHS, the length of the waiting lists, etc. And we could see that becoming quite a decisive issue over the next 6 weeks of campaigning.
Build on that for us a little bit here, again, for our international audience. When we're talking simply about not just the NHS, but when we're talking about cost of living, what is that specifically geared towards? Is that housing affordability, rentals, for example? Is that food prices? Is that even the potential of tariffs in the next 12 months or so? Childcare even. Where specifically does that hit?
Okay, so there are 4 big issues. The top issue is the economy. The second issue is the NHS, very specifically the health service in the UK, which has been under substantive strain. The third issue is cost of living, which is about how it's feeling for people, being able to, like, their own quality of life, what they can afford day to day, the cost of food, the cost of energy. And the fourth issue is around immigration in the UK. That's the 4 in order. So not to conflate the NHS with the cost of living, they are different and distinctive issues. And we know that on public services in the UK, which include the NHS, the public are becoming increasingly concerned about its capacity to deliver today and in the future. Who has the best plan on that may start to become a bigger campaign issue if the economy is starting to feel a little bit better. And some of the signals in the UK that Rishi Sunak has perhaps pinned, bringing this election forward into July on, is that some of those signals have been communicated quite widely on inflation and growth figures, etc.
OK, and we're back to that net pessimism improving slightly. Kelly, how much should we focus on the battle to win Scotland at this election, the travails of the SNP and the ambition of Labour there?
I think Scotland is an important battleground for this election. It's basically a nation of marginals where a small proportion can tip the vote one way or the other. And we know the SNP have been struggling in Scotland, various scandals, new leadership, etc. And what we've got now are both Labour and the Conservatives hoping to gain seats in Scotland. So you may see some particular, I would say, more coverage of Scotland than you might see normally in the national level election coverage, and definitely more campaigning on the ground.
Kelly, nice to see you. Thanks for stopping by to update us on what we should be looking at into this election, the latest polling numbers as well. Kelly Beaver, CEO of Ipsos UK and Ireland, thank you very much indeed. We're going to get more reaction to what is happening around this UK election, the economy front and centre, as we've just been hearing. Michael Saunders, former Bank of England Monetary Policy Committee member, will be joining us. That conversation at 8:30 a.m. London time. That's coming up. This is Bloomberg.
Welcome back to Markets Today. We are 16 minutes away from the start of cash equities trading for this morning, and we have the futures picture looking slightly positive for European stocks, certainly looking positive for US tech stocks. Nasdaq futures up by 0.8%. Nvidia very much to do with that. Let's talk about the broader market stories, though, with our Markets Live executive editor, Mark Cudmore, who joins us this morning. And Mark, let's start with the Fed minutes, because I feel like I should have mentioned this more. We should have mentioned this more yesterday, that the Fed minutes were coming. They turned out to be more exciting than perhaps they usually are, and that when everyone was looking for the Nvidia numbers. So what did you make of the tone, the slightly more hawkish than expected tone we got from those Fed minutes?
Yes, Anna, you were not alone. All of us were pretty much dismissing the minutes as being market moving. And in many ways, they were the more lingering impact from yesterday rather than Nvidia earnings, because we didn't get the big shock in Nvidia earnings. The Nvidia earnings are backing up the kind of underlying story, which is a bull market story built in this AI pillar, strong growth. There's still inflation out there. But it was really the kind of minutes which kind of said, hey, wait a sec. And the reason they did that is because Powell, not just in the press conference at the Fed decision, but in his subsequent speeches, he kind of seemed to rule out the idea of rate hikes. And suddenly these minutes come out and say, that seems a little bit bizarre. It is very clear that Powell's reaction function is more dovish than most of the rest of the committee. And I think we knew he was the more dovish end, but what was interesting from this minutes is that there's a little bit more implication that he might be losing this kind of battle to kind of lead all the troops in the same direction. And again, this reiterates what we've talked about earlier this week. The idea of rate hikes should stay on the table in the US and will come back on the radar again later this year.
What do we look at from here then, Mark? What's the market focus? We've got PMIs coming out from various parts of Europe. We've got fairly relaxed market reaction to the announcement of a snap UK election. Where's the focus for the global audience?
So I think that because we got beyond earnings, I think next week, like over the next week or so, it's really crucial that the kind of key data about is there any kind of real softness coming through in the US economy? Because if not, then the rate story has to reprice higher. And not just in the US, but the Fed will lead it, but pretty much around the world. Maybe Europe's a slight exception, but everywhere, I think there are still too many cuts priced in unless there's some severe kind of growth slowdown coming through. And that's only going to come through the US consumer. So I think from here on out, we stop watching the micro earnings data and we start going back to focusing on the macro consumer data.
Well, speaking of the macro, you got to factor in the politics a little bit as well. And I want to hone in on what Anna was just talking about. Mark, don't go anywhere. There's a chart that caught my eye, specifically in context, how the markets are perhaps viewing the snap election in the UK, which is that it's important, but perhaps not that important, not that tradable just yet. At least that seems to be the vibe from this chart in particular. We're looking at 2-month implied volatility. So basically pricing out the volatility you're going to see in sterling going into that July 4th snap election. You did see it bump up. If you were to zoom out, though, you saw more volatility just 7 days ago when it comes to these particular contracts. Mark, hop back into this conversation here. When does the market react more, to the snap election?
Kriti, I'm so glad you've asked this question because yesterday I just happened to read research before Sunak announced the election provided by Spectra Markets, Brent Donnelly at Spectra Markets, and his morning note was looking at how volatility and FX gets priced going into political events. And he actually chose things like UK elections, the Scottish referendum, the Brexit referendum as his example. And he basically talked about and prior US presidential elections. There's normally two waves of pricing vol. So about 2 months before, we suddenly go, we should price the vol for this event, and there's a spike in vol, and then there's mean reversion as we calm down, and then suddenly again about 2 or 3 weeks before the real event, that's when it really starts ramping up into the occasion. So based on that outcome, we've already passed the 2-month window, which means that, you know, we should stay pretty calm for another couple of weeks. Maybe around mid-June, 2 to 3 weeks before the election date, we'll start pricing in more volatility for this. But the extra context here is we're not expecting much volatility around this event. I mean, we've known an election was going to come in the UK. It's the timing that's new. We have very strong conviction on what the likely outcome is. We think it's going to be a very clear mandate, and we think that the policy changes will not be that drastic. So I think that this is not going to be a high volatility election result. Famous last words, but that's the basis I'm going in on.
Bloomberg Markets Live executive Mark Cudmore joining us with his famous last words. We thank you so much for connecting the dots for us this morning. You can get more from him and the team. All you have to do is type in MLIVGO on your Bloomberg terminal. Let's go from the macro to the micro. Joe Easton joins us this morning with our stocks to watch. Joe?
Morning, Kriti. So I wanted to focus on a couple of UK sectors that might be in focus this morning when the market opens. There's lots of analyst notes out today on what the election means for these specific sectors. A couple from Citi, one of them on home builders. They are actually saying that the election may actually spur further volumes supporting investor sentiment as the housing issue tends to be a focus of elections, and Labour has pledged to reform that. The UK is facing a shortfall of around 100,000 affordable homes per year, according to Bloomberg estimates. And that's been one thing that's weighed on the home builder index, along with the rising interest rates, of course, but that could be an interesting one today. Also, Citi is looking at utilities, specifically water stocks. The government has been trying to reform the water sector, and there is a bill that's pending on the issue. Now, however, some Labour MPs have actually called for dividends in the sector to be placed in special measures, meaning they might actually be delayed, and Citi says that could be a negative. So we would expect maybe to see some action in Severn Trent, United Utilities, Pennon, all the ones that have been hit by the Thames Water debacle this year with the debt concerns over there. Finally, according to a person familiar, the NatWest share sale will be delayed due to the election. That was expected to happen as soon as next month, so we could expect to see some movement in NatWest. Kind of unsurprising given the timing of the election. UK government still has a massive stake holding on to it following the financial crisis, so we'll keep an eye on that one today. Staying in UK financials, Hargreaves Lansdown gets a takeover bid. Now, this stock has been rallying over the past few weeks. There was speculation over it, whether it was due to the fact that it might join the FTSE 100 or whether there was something more going on. We can see that rally coming up here. Now, the bid is coming from private equity, including CVC and also Abu Dhabi as well. But if we look on a longer term, we can see this stock has had a terrible run, partly because of it being undercut by Vanguard, who's doing much cheaper funds these days. That's been a key weight, but Hargreaves set to be a big mover on the UK market today. Then the other one in financials I've got my eye on is SocGen. There's some comments from the CEO. You remember a few weeks ago we had some comments from Emmanuel Macron talking about the potential for cross-border M&A in France. Now, the CEO of SocGen is talking this down at the bank's AGM, saying it is extraordinarily unlikely. And SocGen was the biggest gainer following that report on those Macron comments, retracing some of the losses we saw after results. Keep an eye on SocGen in Paris. That could be in focus once again.
Joe, great stuff. Thank you very much indeed. Joe running us through some of the single stocks that we need to be watching out for this morning. Another conversation you're going to want to pay attention to a little bit later on. Francine Lacroix in conversation with the Ferrari CEO, the company's electric vehicle plans. Long-term strategy, electric vehicles and Ferraris. Let's see how far we exactly go on that particular front. That conversation, 9:10 a.m. UK time this morning. A couple of other things I want to flag as well. The National Grid story, I think, is fascinating this morning.
Electric vehicles.
Precisely.
There's the link.
Yep. And also the Nvidia link. They're doing a deeply discounted rights issue. The reason for it is they need to invest in the grid. The reason they need to invest in the grid is because we're all going to be plugging everything in.
Yeah.
Electrons are going to be flying everywhere. We're going to be plugging in our Nvidia chips into the grid, huge power consumption, but the car story as well.
Yes. Does this tell us something about the structural permanence of this energy transition story, that despite the fact we had an election call just yesterday, 5 p.m. London time, and here we have a quote-unquote huge issue from a big player like National Grid. This seems to be something that the market is assuming will happen regardless of who's in power in 10 Downing Street.
Yeah, I thought the other kind of move that they were making is pretty interesting as well. Issuing new shares, so a little bit of dilutive effect as well, perhaps even at the open that we may see. And also selling their LNG terminal and their onshore wind business. Isn't that supposed to be kind of the growing Biden agenda in the States, the LNG story and the wind business? And
this is a company with US. This is a business with US exposure,
right?
Yeah,
and they're betting against it, basically.
Well, maybe all they're saying, we need to focus on this rather than focusing on this, and we think there's sufficient value over here maybe to offload, or a lack of sufficient value.
Yeah.
Are companies being rewarded for their renewables businesses at the moment? I think some of the big energy companies would argue maybe not, and maybe they don't feel that they're the best operators for these assets.
Probably worth flagging once again with the story that Joe was talking about around the SocGen CEO's comments, because it's sort of, after we saw our interview with Emmanuel Macron last week, wasn't it?
Yeah.
We saw actually some French stocks gaining on the back of speculation. We could see M&A, and now we have the SocGen CEO saying it's extraordinarily unlikely.
Yeah, just kidding. Let's see if they, at least at the open, with those comments, if you see some move in the stock as well. That's going to be something that we cover going into the European market open. There's a lot to digest, actually. What is the read-through from the macro that we were talking about, the Nvidia story, FOMC, et cetera, plus some of the individual movers? We've got you covered. The market open is next. This is Bloomberg.
Good morning. Tuesday the 23rd. You've got a lot to think about this morning if you're sitting down at your desk trying to figure out exactly how you are going to position yourself for the market in front of you. Are you going to focus on the Fed? Sounded much more hawkish than Powell. The Fed minutes, I would argue, sounded much more hawkish than Powell did in the post-meeting press conference. Or are you going to focus on Nvidia? Or are you going to focus on the UK election? It's going to be interesting. At the moment, it feels like a really difficult question to answer. Asia felt like it was more kind of leaning towards the Fed and kind of a little concerned about how hawkish the Fed sounded. US futures fairly mixed. I'm looking at some fair value calculations that actually point to the idea that actually we may see a fairly flat open this morning. So maybe those two factors are in balance.
Yeah, could be regionally divided, couldn't it? But I mean, maybe you say, as you suggest, maybe the Fed news spreads. It does feel like, certainly from the futures picture, there's more upside around Nvidia. 0.8% higher on Nasdaq futures right now.
Yeah, a massive move. But what is the read-through then? I mean, you see that in Euro Stocks 50 futures marginally in terms of kind of risk sentiment. Some of that's coming bleeding in through Asia as well. But to your point in the bond market, I'm looking at a 10-year yield that's sitting at 4.42. It's done a whole lot of nothing, despite some of the commentary that we've gotten in the last 24 hours.
It was surprising how little the bond market reacted, but you have seen quite a run-up in yields recently in terms of what we've seen post the press conference. So you got kind of yields came down as you got the Powell story, the data, and since then we've picked up a little bit. But you've got basically a 0.5% rally potentially on the cards in the United States.
I suppose if you think about the Fed minutes, if your view was Q2 is going to be more in line with a Fed cutting mode in terms of the inflation data than Q1, then maybe you still think that, and maybe that didn't tell you anything new. But the market certainly took a wobble. Yeah, I mean, the theme seems to just be that net-net, you get all this volatility intraday, but it all comes kind of right back in the next 5 days. At least it's the bond market story. The equity market story, opening in just a few seconds. We're going to see what that read-through does actually look like, and that marks that the FTSE 100 is officially open as we wait for some of those other exchanges. Marginally in positive territory, though, even the futures weren't doing it, and they're starting to see a slight jump when you're talking about the initial move on the macro space. Yeah, indeed. Just looking at where we are on these markets then, some slight positivity, up by 0.2% on the FTSE 100. In terms of market reaction to the election story, it was much talked about in markets yesterday that perhaps this was going to come, and of course we saw it after hours, the announcement of the snap election. But other markets that were still trading, of course the pound seemed to take things in their stride. We'll see if we get any thinking in the bond market about this, or maybe that just develops through the course of the campaign over the next 6 weeks, or maybe not. Maybe it's not really a market story.
Yep. We will try and find one. If there is one there,
we'll find it.
We will find it. I absolutely. But it's interesting that we were talking to Ipsos Mori earlier, saying how important the economy was going to be. Single stocks, you've got the chip sector higher. Certainly no surprise there. ASML is high. You've got Infineon tracking higher as well. So it does seem as if technology is one of the gainers that we are seeing in terms of the sector story. It's interesting that St James's Place is up this morning. We look at the story that Joe brought us earlier on Hargreaves Lansdown and the potential offer from private equity for that business. So James's Place may be getting a little halo effect off that this morning as well.
Yeah, Hargreaves Lansdown not open yet, I think. And I actually saw some quite varied calls around where it might trade. Some suggesting, yeah, you know, M&A activity, typically it trades higher, but others suggesting that there wasn't much upside. So we'll see where that one comes through. In terms of some of the other stocks that we've been focusing on this morning, WizzAir having a fairly good morning, up by just over 5%. We spoke to the CEO of WizzAir, Joseph Ferrazzi. It's very much about the supply chain, isn't it? About the engines and whether they can keep their planes flying with all the Pratt & Whitney issues.
It is, and that's where the problem lies at the moment for the entire sector. It's not just Pratt & Whitney with the Airbus aircraft, it's also the Boeing issues as well, and Ryanair has been hit there. But it's interesting that the picture on fares is actually as muted as it is. Now, it was interesting talking to Joseph. His view kind of was that maybe Ryanair got ahead of its skis and had to sort of wind itself back in a little bit. Yeah. EasyJet's not painting a particularly kind of clear picture. He's sounding a little bit more optimistic, but he's planning for next year. He just wants his aeroplanes back. He just wants to be able to put aircraft in the air. He says the demand is there. The consumer, he said, which I thought was really interesting, is in great shape still.
We got to mention another one as well. We got news that the UK CMA is actually going to be probing their veterinary sector. They've been talking about this for a little while now, really telegraphing this well. I was having a market read-through this morning. Pets at home falling about 1.1%. CVS down about 2.5%.
I feel like this is a part of the consumer landscape in the UK that you might be familiar with.
I'm very sensitive to this. Harvey, my dog, lives a very exposed. Harvey lives a very luxurious life. This matters a lot. I actually spend more on his insurance and needs than I do on my own.
Amazing.
Which I think speaks to the UK lifestyle and owning a pet in the UK. Something I'm sure, I think, Guy, you have a dog.
I got a dog.
True.
I got a dog. I got children. I got all kinds of things. They all seem to require a great deal of financing.
Yeah. All right. Well, that is your micro story. There's plenty of the macro as well, though, and we keep kind of coming back to this theme of what actually is moving markets. What should we be sensitive to? The equity story, the bond market story, the FOMC minutes that nobody really saw coming. Well, it all kind of connects together. And the perfect person, I should say, to talk to us about it joins us on set this morning. Kencel, lovely to see you in London, by the way. Welcome, President and CEO of Churchill Asset Management. Look, we're obsessed in terms of trying to find a narrative here, and there's a million things going on. So I'm going to go big picture with you first. When we're talking about the volatility in this market and this consumer resilience that just doesn't quit coming out of the States, is the Nvidia story, is the Fed story ultimately at its core just a question of liquidity, and when does that snap?
Well, look, I think, as we look at the markets, we're seeing a long-term trend of rates ultimately normalizing. It's taking longer, right? So we're definitely in a higher for longer environment. But as rates normalize, the opportunity for companies to go to the capital markets and raise financing is opening up. I mean, we had the broadly syndicated loan market, the liquid loan markets essentially closed for the last 18 to 24 months. So, they've opened up. The empire strikes back. We're seeing the large liquid markets open for companies. So I think that all bodes well for liquidity, the ability of companies to raise capital, the ability to start investing in businesses, and frankly, the return of M&A activity.
Is that just a function, though, of money sitting on the sidelines that has been for years now, kind of dipping their toe back in the water, getting a little bit more comfortable here to actively participate in this market as opposed to sitting, say, on front-end yields or in private equity? And we'll circle back to the alternative story in a moment. But is that what this story is, as opposed to real confidence in the fundamentals?
Well, I think you are seeing some confidence return. We had a reasonably long period there of price discovery in the M&A markets. Gee, our company's really worth 18, 20 times cash flow. Are we overpaying for businesses? And was the financing markets, were they an aberration in terms of funding deals that were maybe over-levered or undercapitalized? I think that things are moving in the right direction. We saw a significant return to normalcy in the financing markets in the world that we live in, which is private credit and private equity. Deal activity was actually quite good in the core middle market, which is the third largest global economy. If you kind of look at the overall U.S. market, we saw a significant resurgence in M&A activity, deal activity, private equity coming off the sidelines. So, for example, our M&A activity, our deal investing activity was up 80% quarter over quarter from 23 to 24 and was up 60% in the fourth quarter. So we're seeing a gradual return to normalcy against a backdrop, obviously, of political uncertainty, both here and in the U.S.
Yes, I want to come to that in just a moment. But you were just talking there about the role of private equity, and I wonder what the mood's like in that sector, because if you can't exit, you can't buy, it seems. And we were there for quite a while, weren't we? And now things are changing. I mean, is it just in time for the private equity space? What's the mood there?
Well, look, I think you've had private equity firms unable to deliver distributions for, a reasonable time here. Distributions on our private equity fund commitments and our co-investments, were down significantly last year. So I think private equity is beginning to come off the sidelines. I think we're coming through a period of price discovery, and I think we're starting to see buyers and sellers match up in a better way. So I'm pretty optimistic about the economic environment, deal environment, and M&A activity. And as we move through the course of 24, I think rates, will come down. Obviously, slower, higher for longer. They will come down slowly, and I think that'll drive better investment activity.
You mentioned the link with politics and political uncertainty. So, I don't need you to comment specifically on National Grid and its plans, but we've got this big UK business with a big issue today, issuing shares to invest in the National Grid, all about the electrification story here in the UK. And this comes just a day after we had an election called.
Yeah.
Does politics not get in the way of some of this capital markets activity? Is it much more about the rate story now?
I think it's more about the rate story, although the backdrop of the political dynamics will increasingly come to bear. I think you'll see the Fed back away a bit from interjecting themselves into the election. So at some point in July or August, you'll see the Fed, try to stay out of it and allow hopefully the people to make that decision. But I do think the underlying backdrop is a move toward normalcy in rates. I think the new normal will be higher than where it's been historically, but I think businesses and companies are getting used to that, and hopefully post-election we'll start to see some certainty around business conditions and continued improvement of activity.
Morning, Ken. You talk about the fact that companies are getting used to the higher for longer environment. What's happening inside portfolio companies right now? Are they really getting used to higher for longer? Private equity is very good at financial engineering and is figuring out various ways to make the debt loads that some of the companies it has within its portfolio can be managed, and the duration effectively being pushed out to allow these companies to continue to operate. If rates stay higher for much longer, are we at some point going to see the end of the road in the ability of private equity to kind of push that process forward?
So there's good and bad there. So I would say from a portfolio perspective, there are companies that were aggressively financed over the last several years that are going to continue to have issues. And you are starting to see cracks in portfolios of certain lenders and certain managers. I would say from our perspective, we have a portfolio of 450 U.S. mid-sized companies that we are watching very carefully. We're not seeing it, but I can tell you that other lenders that may have been a bit more aggressive than us are starting to see it. So I think the longer the higher rate environment goes, the more you're going to see companies that simply can't sustain themselves at the higher leverage and at the higher price of financing. If your interest coverage ratios are less than 1, you have an issue. So in that sense, I think you're starting to see it. On the other hand, I would say the opening of the large liquid loan markets has given them a bit of a reprieve in the sense that companies that couldn't finance themselves, didn't have an alternative in the liquid markets, are now coming to market, frankly, at record numbers in the first quarter. So what you're seeing is refinancing activity, deals being done to kind of deal with maturity walls in companies that have to refinance or otherwise have issues. So I think it's a mixed bag. But overall, the opening of the larger markets, has been a positive for availability of financing and companies' ability to kind of redo their balance sheet or redo their capital structure.
How much of a difference, therefore, is there between the United States and what's happening in Europe? We're still arguing about a capital markets union here in Europe. We still don't have the capacity to finance in the same way. We still don't have the number of options that US companies have in terms of their ability to seek financing. And I'm wondering, therefore, when you being here in London, how you see the different story in Europe versus the United States, and how companies are therefore going to navigate, how portfolio companies are going to navigate this process, given that difference in the financing options that they have?
Sure. Well, I think as a direct lender, as a private credit investor, I would say both markets are actually quite appealing, but for different reasons, right?
Okay.
So if you're a direct lender in Europe, for example, you have less large-scale competitors, and you've got significant barriers to entry given all the local currencies and local laws, right? So you've got different bankruptcy laws, you've got different dynamics. You really need to be local in Europe, and that really creates barriers to entry. And so there are a limited number of larger players in the market. So as a lender, that's a good thing.
Yep.
I'd say as a borrower, it tends to raise costs. So you're generally paying more. The capital markets are less efficient. There's more, the liquid markets are smaller overall. In the U.S. market, larger, more competition, capital markets more efficient. And so I would say from an investment perspective, different dynamics. But overall, the U.S., I would say, is running ahead of Europe in terms of the economy and overall, economic dynamics. I would say if you look at the various industries, software, technology in the U.S. doing extremely well. Pockets of challenges in healthcare, particularly dealing with reimbursement pressures.
Yep.
Certain healthcare businesses are having a difficult time. But overall, business services, faring quite well through this.
Ken, I'm going to put you on the spot here. 20, 30 seconds, if you can.
Sure.
Are the public market and the private market, are the valuations you're seeing in both justified?
I think that, we deal mostly in the private markets, right? Although, obviously, there's a knock-on effect, in terms of public valuations. I would say that they are increasingly finding their level. They're down roughly 3 to 4 turns from where they were 18 to 24 months ago. So a very, very high-quality company, mid-market, private markets company, could easily trade for 15, 16, 17 times cash flow. In today's environment, that same company is probably trading at 11 to 12 times cash flow. So still good by historical standards, but the edge has been taken off a bit. So I think they are justified today. I think they've found their level. Obviously, the financing markets have come in dramatically. Just with the cost of leverage, you simply can't put 6 or 7 times leverage on a business today. So as a result of that, leverage and pricing have come in, but I would say they are finding their levels. And as they find their levels, deal activity has picked up a fair amount.
Ken, great to see you. It's interesting that the Fed noted yesterday in the minutes, several members commented on the rapid growth of private credit markets. So the Fed's certainly sitting up and paying attention to what you guys are up to. Ken Kencel, nice to see you in London.
Thanks
you very much indeed for stopping by. President and CEO of Churchill Asset Management. Thank you very much. Let's take a look at where some of the biggest stocks here in Europe are moving this morning. We're watching carefully to see the Nvidia effect. Francine is going to be talking to the CEO of Ferrari in the next hour, so pay attention to that conversation. But look, Schneider's up, ASML rising very nicely. The Nvidia effect front and centre in European markets this morning. What else are we watching? Let's find out. Joe Easton, over to you.
So we will continue with that look at the chip stocks. You mentioned ASML there, up around 2.5%. BE Semi also gaining. Aixtron, the semiconductor manufacturing companies, gaining the most following that blowout Nvidia report. The revenue well above $25 billion per quarter for Nvidia. It's hugely impressive. We're seeing it feed through into some of the chip makers as well, as ST Micro and Infineon, both of them gaining this morning. But we're also going to look at the UK with Hargreaves Lansdown, this surprise takeover offer that came out after the close of trading yesterday. That is a big mover, the biggest mover we've got on the Stock 600 today. There it is, up 15%. That should be on track for a record gain. It was up the most in 4 years at the open of trading. This bid coming from CVC, also Abu Dhabi as well, surprising the market. And look at the peers as well, because we're seeing AJ Bell gaining 10%. They've got their own earnings out today, but this seems to be driving the move. Also seeing gains in Aberdeen, and as Guy mentioned earlier, St James's Place, seeing a read-through. Could this be the next UK sector that gets a string of takeover bids? We'll wait to see if this progresses with the Hargreaves deal. Then, in terms of some of those other UK stocks, we mentioned the potential election impact on utilities, specifically water stocks, some concern around a potential halt to dividends while the election goes through, and potentially that big paper on the water sector about cleaning up the industry, and also the debt loads potentially being delayed. So we're seeing some drops in Severn Trent United Utilities as well. But we also had an eye-watering placement of shares coming from Nat Grid. They're doing a rights issue. It's £7 billion. We all did a double take when we saw the size of that one hit the screen earlier, and that stock is dropping $8 billion. They've got debt issues, also trying to revamp their business, focus on the renewable space as well. So that is getting hit hard. We're down 8% on Nat Grid, and we're also seeing Drax falling 7% as well as a bit of a read-through. In terms of the earnings, you've been covering WizzAir. That one doing pretty well. They are pretty bullish on the summer bookings. Obviously got those Pratt & Whitney issues that you mentioned. Julius Baer, bit of weakness in some funds, and Embrace It in Sweden. Once again, the gaming stock getting hit. Just a quick look at pets. Kriti mentioned there. She's been supporting the pet sector with her dog food purchases, but that sector is down given the CMA announcing that review into the sector, a full review. There was some concern around that already. Then Unilever, finally, we got a double upgrade, as they say in the trade. It was underweight. It is now overweight at JP Morgan. They recommend you should be buying this one. Unilever, of course, looking to spin off ice cream, also doing pretty well in their core business. But that one is gaining today. We're up 1.5% in London, £64 price target. It trades at about 51. So a lot of upside. Unilever gaining this morning.
Joe, thanks very much. Joe Easton from our equities team. Let's go to some macro data just breaking across the Bloomberg terminal. Mixed, really, coming through from France, but the focus maybe on a disappointment in services. So on the manufacturing side, it ticked up more than we'd anticipated, but on the services side, we'd expected a tick up, and actually it's dropped down into contraction territory. So below 50, the euro has dropped on that, not by a huge amount, but it's certainly off earlier highs. Coming up on the programme, we take a look at reaction to UK Prime Minister Rishi Sunak's summer election gamble. That's next. This is Bloomberg.
Welcome back. 20 minutes into the equity market session. This is what you're looking at. A small bounce. Not a great deal of a bounce, but a small bounce. You're seeing the competing factors of the Fed and Nvidia play out in European equity markets this morning. Technology, certainly a big beneficiary of the Nvidia story, and you can see that in the sector breakdown this morning. We aren't seeing a massive effect. You are seeing some effect from the UK election story, particularly in the house builders, but elsewhere feels a little bit more muted. Maybe we'll get more as we work our way towards the July the 4th election. So the UK Prime Minister, Rishi Sunak, surprising everybody with that date. We've got a 6-week battle with the Labour Party, the opposition party led by Keir Starmer, with a significant lead at this point in time. Let's take you back down to Westminster. Lizzie Burden, our UK correspondent, joins us from there. Everybody seems to have been caught by surprise by this early date. Why July the 4th?
Well, Guy, even the Chancellor, Jeremy Hunt, seems to have been surprised by calling a July 4th election. Perhaps Rishi Sunak's hoping for better weather. Yesterday, he got absolutely drenched in Downing Street, and it didn't escape the newspaper's notice this morning. Drown and out is the headline on the front page of the Daily Mirror today. Look, what was Rishi Sunak hoping for by calling this snap election? Well, it's no coincidence that he called it on the day inflation fell to 2.3%, back to normal in his words. He wants to take credit for inflation coming down on his watch. Ironically, markets didn't see it the same way. They saw the inflation numbers yesterday, beats on the headline core and services numbers, and took it as a certainty that a June cut is now off the table. 12% was the pricing the last time I checked. But also, Rishi Sunak will have had an eye on the fiscal. The latest public finances data suggests there isn't going to be a lot of wriggle room for tax cuts in an autumn budget. But of course, he will have had an eye on the polls as well, Guy. As you mentioned, that poll lead in some counts 30 points and not closing despite the economic progress. So Rishi Sunak, as The Guardian says, taking an uncharacteristic gamble with an early election. But Starmer's task now, the opposition leader Keir Starmer, is going to be to turn that poll lead into votes, because he's got to execute the biggest electoral turnaround since the Second World War. If he wants
Lizzie,
to get
thanks very much. Lizzie. Right, which he says he does. Lizzie, thank you. Bloomberg's Lizzie Burden on the green for us in Westminster. Let's bring in Bloomberg Opinions. Adrian Wooldridge, who's been writing about UK politics for many years and can give us his thoughts this morning. So, a bit of a surprise in terms of the timing, and you had to call it at some point this year. Lizzie was mentioning there what he has to do in terms of creating this swing from the Conservatives to Labour, but the polls suggest he's very much in the lead. Where does your focus sit when you think about where he has the numbers?
Well, I think he's going to win. I think Starmer's going to win. I think he's a very long way ahead in the polls. I think that Labour is, they have a message, they have a coherence, they have a popularity in the country which is almost impossible for Sunak to overcome. And I actually think that Sunak didn't call this election for any real reason. The 2.3 number was not great. It was all right, but it wasn't. It was a bit less than the market was expected. I just think he's had enough. Frankly, he doesn't want any more embarrassments with MPs crossing the floor or doing weird things, as these Tory MPs seem to be inclined to do. He just thought, well, there's no upside here. So I think we're seeing the end of 14 years of Tory rule. We're about to go into a period with a Labour government. So it's an important day.
What changes public perception when it comes to the economy, though, given that inflation is actually coming down?
I think it's a very lagging indicator. I think people basically don't feel that much better off. They feel that inflation is still dragging on their incomes. But I think the overwhelming determinant of this election is not the economy, whatever Rishi thinks. The overwhelming determinant of this election is that people are tired of the Tory government. They've had 14 years of this. They've had a very, very anarchic government in power, and they just want to change. Now, this is not a vote for a Starmer government, really. I think this won't be a vote for a Starmer government. There's no great upsurge in enthusiasm for Starmer in the way that there was for Blair in 1997. It's a kick-the-bums-out election.
How similar is this Labour government to the Blair government that came in 97? Is it more comparable with the Brown governments that went out in 2010? How should I think about what this Labour government is going to do?
I think you should think of the Labour government as being closer to Brown than to Blair. Blair was a real reformer. He wanted to change the state. He wanted to make it more market sensitive. And he was essentially a neoliberal. I don't think Starmer is those things. He's to the left of Blair, but a long way to the right of Corbyn. So we should see it's a sort of a return to Labour as a party of justice, a party of being in favour of the poor rather than the rich, not a sort of party that's, like a Peter Mandelson party of letting everybody feel their oats. But I don't think he'll do anything really crazy.
Radical.
Radical. He'll be a steady as it goes person.
Edwin, great to see you this morning. Thanks for all the updates. We really appreciate it. Edwin Wooldridge from Bloomberg Opinion. Thank you very much. We've got a special podcast coming up, Voteromics. Make sure you listen to what is being said on that. Interesting stuff. Very interesting stuff, actually. Take a listen. This is Bloomberg.
It's not game over for high inflation in the UK. As you've already alluded to, core inflation is still higher than it should be. And the main driver for the drop today is the energy price cap regulation we have here in the United Kingdom, which is welcome, but the Conservative ministers here shouldn't be starting a victory lap. And as we've been saying frequently in the Labour Party, we welcome the statistical improvements, but until people at home feel like the economy has turned a corner and they're better off, I don't think the voters here will think that the economy has turned a corner, no.
That was Darren Jones, UK Shadow Chief Secretary to the Treasury, speaking to us yesterday after the inflation report from the UK, before we got the announcement about the UK election being called, of course. Let's pivot over to the German economy, though, because we're gradually building a picture of where the Eurozone economy is this morning. We had the data out of France. Now we have the data out of Germany. And the French data sent the euro lower. This data sent the euro a little bit higher. I mean, it's all sort of oscillating around the flat line, but it bounced off the earlier French numbers. So manufacturing has improved a little, but still in contraction. Services also improved improving slightly in Germany, and that's in contrast to what we saw in the French number, and so perhaps that comes as something of a comfort. And as I say, the euro bounces a little. Let's get back to the UK story, though. Our colleague Lizzie Burden, our UK correspondent, is in Westminster to take an economic look at where the announcements of the UK election leads us. Lizzie.
Thanks, Anna. Yeah, I'm joined in Westminster by Michael Saunders, former Bank of England policymaker and now a senior advisor at Oxford Economics. Lovely to have you back, Michael. We had that inflation reading yesterday, 2.3%. Rishi Sunak says inflation's back to normal. The financial markets reckon it's so sticky, a June rate cut is off the table. Who's right?
Well, I think a June rate cut is looking very unlikely after the inflation figures. The decision to call the election won't really alter that, other than in a very limited extent. The MPC would be especially reluctant to do a surprise rate change during an election campaign. I think that they would prefer not to do anything which by their own actions would be a cause of volatility. But look, in practice, a June rate cut is probably ruled off by the inflation figures.
So will there be any worry on the MPC about looking as if they're giving a helping hand to the government?
I think it's rather that with the inflation figures coming out higher than expected, they don't have the evidence to cut rates for now. But also, you know, there's no great rush. They can afford to wait for a bit more data to come through. And as I said, they themselves wouldn't want to be a cause of volatility.
Do you expect more members of the Monetary Policy Committee, your former colleagues, to join Swati Dinger and Dave Ramsden in voting to cut in June?
Possibly, but actually I think unless the May inflation figures, which will still come out before the June meeting, are especially low, I think it's more likely that they would wait until August. But the MPC have set out the conditions for lower interest rates, that pay and prices have to come down more or less in line with the forecasts in the May monetary policy report. So far, the news has been a little bit higher than they expected. So it's really the evidence which you would need to see to change before the MPC members' votes would also change.
Yeah, services inflation particularly sticky. What would be a healthy level to start to cut?
I think it's fair to cut rates gradually before pay growth and services inflation are back to target consistent rates. So a target consistent rate of pay growth would be about 3.5, services inflation probably about the same kind of pace. As long as you're reasonably sure you're on a path to that, then you can start to cut rates gradually, conscious that the lags on monetary policy are quite long, and therefore if you wait until everything is sorted, you've probably left it too late.
And just thinking again about the election, does Keir Starmer, if he wins, have the fiscal room to grow the economy significantly in 5 years?
Well, this is going to be the big challenge for whoever's in government for the next few years. The UK has low potential growth, which means the trend growth of tax revenues is quite low. There's strong pressures for higher public spending from the ageing population and increased need for defence spending. And we've got to get the public finances back onto a sustainable path. Now, trying to reconcile those three is going to be a difficult task for whoever's in government. The best way to do it is to do measures which can raise the economy's potential growth. Then tax revenues will be stronger, the public finances will improve, and you'll have more money to spend on public services.
But of course, growth is something that both parties agree we need. We haven't had the election manifestos yet, but knowing what we know so far about Labour's plans, do you think that financial markets will be worried by a new change of government?
So I think financial markets and international businesses will be extremely relaxed about the prospect of a change to a Labour government. Now, that's partly because Labour themselves are viewed as a moderate centrist party. It's also because the Conservatives have perhaps lost their previous claim to be the party of economic competence after the chaotic period of the last few years. We've had, 5 prime ministers, 7 chancellors. Honestly, I've lost track of the numbers of business secretaries, housing ministers, and industrial strategists. So, I think probably investors would perhaps breathe a sigh of relief.
And I mean, you rub shoulders with these business leaders all the time. They're your clients. Do you think that Labour has now become the party of business?
To an extent, yes. I think yes. I think that they've made quite a marked shift in the last few years. But it's also, as I said, that the Conservatives have foregone their previous claim to be the party of business of economic competence.
And Rishi Sunak hasn't recovered that?
I don't think really, no. Look, GDP per head in the UK, which is a key driver of living standards, is still lower than it was in 2019. Now, I mean, I wouldn't call that a successful economic strategy.
OK. What's the one economic policy, then, that you would advise any party to put in place that would make a significant difference in their manifesto?
So I'm going to cheat slightly, and I'm going to go for three. Closer trade links with Europe, higher public investment, and build more houses.
And the housing policy of Keir Starmer, do you think that that will, or the Conservative Party, do you think that it will make much of a movement in the housing market?
Well, the key thing is to make it easier for people to buy a house and thereby move to where the jobs are. And that improvement in labour mobility would help businesses to hire, to invest, and improve the economy's potential growth rate. Now, the Conservatives have at times talked of higher house building, but actual house building has been really low. So a government which puts higher house building as one of its key aims, I think that would help to improve the economy's long-run potential.
Would it lower prices, though?
It would lower prices, but the key mechanism is to make it easier for people to move, to seek job opportunities. And that helps firms to hire, helps businesses to invest, allows new opportunities to expand.
OK. Michael Saunders, economic advisor at Oxford Economics, with a little view on what we might be able to expect from the election manifestos from both parties. We'll wait for them to come up. Back to you in the studio.
All right, Lizzie Burden there again, as she said, with Michael Saunders. We thank you so much for bringing us the interview this morning. Coming up on the program, the UK's National Grid plans to raise almost £7 billion to help fund a massive investment program. We're going to dive into the details next. This is Bloomberg.
Good morning, welcome back. 41 minutes into the equity market session. Stocks really haven't moved very much in terms of what we are seeing. Let me give you a few 52-week highs. Allegro's up quite nicely. Some of the defence stocks are really moving quite sharply this morning in terms of the 52-week highs we're seeing there. Unilever on a double upgrade at a 52-week high. And unsurprisingly, ASML International, some of the chip stocks doing very well too as well. One stock that is certainly suffering, but maybe for the right reasons, is the UK's National Grid. It is planning to raise £6.8 billion in capital as it seeks to invest £60 billion in the energy transition over the next 5 years. The plan basically is to help strengthen Britain's power grid so that we can plug renewables into it, we can plug our cars into it, we can plug our Nvidia chips into it. Let's talk about this and kind of what the story looks like going forward. We're joined now by Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. This seems entirely logical. We spend so much of our time talking about the power demands that are going to come from server farms. We spend a lot of time talking about the energy transition and the need to plug renewables into the grid. National Grid is the bit that plugs it all together, isn't it?
That's exactly right, and I think grids are going to be a big focus for the world as we go through the energy transition. BNEF had a piece of research this week that explained that we're going to need to spend as much on grids as renewables if we're going to make the energy transition work, because power demand is rising, driven by electric vehicles, driven by data centres, as you say, and renewables create a huge amount of power. If we think about the UK, though, that power is all in the North Sea, and you've got to move it to the parts of the economy, i.e. London and the South East and industrial areas in the Midlands, where it's most needed.
Can I ask you about the timing of this, Will? Because this strikes me as quite fascinating. Just the day we get this quote-unquote huge issue, just the day after we got an election announced, and, you know, traditional logic might dictate the capital markets activity is a little subdued when there's electoral uncertainty. I'm looking at the FTSE 100 underperforming today. It's down 19 points, but actually 15 points of that is National Grid. It's taking a chunk off the FTSE. I mean, talk to me about the timing. Does the election just not matter in this context?
Well, I think people had been expecting National Grid to make this kind of move, and I think they've probably been talking to their shareholders about it for some time. I think the grid story will come into play no matter who wins the election. Clearly, if the Labour Party wins the election, which is what the polls think at the moment, they are committed to the rapid decarbonisation of the grid, which will require the kind of investments that we're talking about. But I think they would have probably needed to do this no matter who wins the election. So in that sense, the timing for National Grid isn't very important. It is a very big capital raise. I mean, you're talking about a company that has a market cap of 36 billion. Its equity value on its balance sheet is 30 billion, and they're raising almost 7. So, you know, this is
unprecedented, according to Jefferies.
A real serious beefing up of the balance sheet, and I think shows just how much investment is going to need to be done. Should also point out that a lot of that investment will be in the UK, where over half the investment, but they have a big US business too, where they need to invest in grids in the northeast. And when I've talked to National Grid, a lot of that is driven by demand from things like chip factories, which are being built in that part of the US. So these themes that we talk about all the time are really, you know, seen in this deal.
But what does that exposure abroad even look like? Because in that same statement that they're talking about the capital raise, they're also selling their onshore wind business as well as their LNG terminal there as well. Yeah. Why? What's the reasoning there?
With the LNG terminal, I mean, they used to be a very big gas player. I mean, they've sold some of their gas distribution assets. I think they probably feel like that's not essential to the future of the business. And that they want to use that as an opportunity to raise cash elsewhere. And I imagine they have the same feeling about the onshore wind business, that it's non-core, that the direction of the business is building these high-voltage power networks, both in the northeast of the United States and here in the United Kingdom.
All right. Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy, walking us through the National Grid story. Those shares, of course, still lower and dragging the FTSE down, as Anna mentioned earlier. Let's take a look at what else is on the agenda today. At about 9 a.m. London time, we continue to get those euro area PMIs. We're already getting numbers out of France and Germany as well, creating a little bit of volatility in Europe. We'll see if they, or in the euro, excuse me. We'll see if that continues into the 9 and where ultimately the euro actually stands. At 12 p.m. you got UK time. You have Turkey rate decisions. 1:30 p.m. London time. The shift focuses to the U.S. Initial jobless claims, new home sales, plenty to deal with there. I keep coming back to the fiscal story, though. The G7 finance chiefs meeting in Italy. Does that yield more context, more clarity around the path of maybe how this market is even tradable, what the future of European money looks like?
What is the future of European money? I think they're going to
investment and
no. What are they going to do? Are we moving towards an idea where we're going to be funding defence jointly? Are we moving to an idea where we're going to continue to fund the energy transition jointly? I think these are key questions that they need to answer. In order to get that over the line, they need to figure out all kinds of other factors. I also think Ukraine's going to be fairly dominant at this meeting in terms of the financing story around that. This idea, and Anna, you were talking about this the other day, that Germany's getting on board with the idea that actually you can use the interest that is being thrown off by Russian assets maybe to help Ukraine and its efforts to fund the war.
Yeah, absolutely. And we know that the US has been pushing for this, according to our reporting, and so we could see progress on this at this G7 meeting in Italy. That's certainly going to be one of the areas we focus on. Also taking place today, we have, talking about the role of politics in markets right now, the EU, the European elections, of course, we're gearing up for those as well as a UK election, and we're going to see EU an election live debate taking place today. So that'll be something to watch in terms of the people who want to lead the European Commission, what they're going to be focused on.
This seems to be flying under the radar to me a little bit. UK elections coming up, we're going to see some big debates. We're going to be focusing on that. We've got a US election coming up, we're going to see some big debates. These are going to be events that we're all going to tune in and watch. This feels like it's flying under the radar a little bit. Ursula von der Leyen has had a meaningful impact on policy. I appreciate that Europe is run by governments, not by the Commission, but the Commission has a significant impact here. And her impact, everybody else's impact within the Commission has been substantial. Look at what's happening in terms of competition policy and all these other things.
Cars out of China.
Precisely. The tariff story kind of... And it feels... I'm always stunned how little attention is maybe paid to some of these events that happen. And then later we go, oh, yeah, that looks really important.
Can I put my Spanish correspondent hat on for
Absolutely.
a moment? I have to.
We're actually going to get you one. Believe me, that is coming.
Right next to my Dow 40,000 cap as well. This is really important, especially when it comes to the context of Spain. There are deals going on in Spain right now. We have the BBVA Sabadell, we've got Telefonica, we have government stake that are kind of being put on pause right now to know how much the result and the influence that Pedro Sanchez has off of the back of these European elections. There's a very clear market read-through that's kind of been put on ice for a moment until we figure out not just the regulatory story out of the European Commission, but how that reflects back into some of the deals for state-owned stakes.
Shall we get back to the conversation about how the Eurozone economy is recovering to some degree from the shocks that have been thrown at it over recent years. We've got some PMI data out this morning from Germany and from France. Mixed reaction in markets to that, from that mixed set of data, really. Let's go to the German side. German private sector activity is growing at the fastest pace in a year as the country's industrial malaise perhaps abates a little. Joining us to discuss this morning's PMI data, we have economy reporter for Europe and the ECB, Jana Randau. Jana, good morning to you. So we saw the euro whipsawed by this data. First, we got the French data, where it seemed to be the services contraction stood out to me as a disappointment. And then we got Germany kind of saving the day and the euro goes higher. I mean, it's either side of a flat line, so it's not particularly drastic moves. But what was your takeaway then, top-line takeaway from this data set?
Yeah, so the top line very much confirms what we've seen over the past weeks, that the economy is gradually recovering, and Germany is a particularly nice surprise this morning, of course, seeing services doing much stronger than expected, manufacturing coming out of its slump finally. It's been there for way too long. And even France, even though it disappointed, the overall private sector economy falling back into contraction because of weakness in services, even France, there is some underlying positive news in these reports. We've seen in both countries, actually, orders rising for the first time in about a year. We're seeing employment rising. We're seeing confidence solid in France. We're seeing it improving in Germany. And what's probably very important is that the news from the price side, from the inflation side, is not getting significantly worse. So that's the good part, actually. And the nowcast built on these PMIs suggests second quarter growth for both economies around 0.3%, a pickup from the first quarter, which was already better than expected. So you're seeing an economy gradually finding its feet, wobbles here and there along the way, but knowing that those two economies were the weak spots of the Eurozone economy for a very long time, and growth was actually a lot stronger in Spain, in Italy, in the periphery. It's overall very good news.
Jana, how much do these numbers reflect an already priced, i.e. it's already in the system, an ECB that's going to be cutting rates? To what extent are the markets, are companies front-running that expectation that rates are going to be coming down, that the cost of money is going to get cheaper?
Yeah, so a lot of what we've seen on the confidence side and confidence indicators from investors, from businesses, from consumers, a lot of that pickup over the past weeks and even months, that was clearly built on expectations that interest rates would fall down and retreat over the course of the year. So in that sense, that is priced in, that is expected, and the ECB has signaled between the lines that it is planning to deliver those rate cuts. Economists expect around 3 cuts this year. Markets are more or less on track with that, and policymakers, from those who've heard, we also see a consensus, if you want, emerging around that kind of a trajectory for interest rates. So that is very much built in, which means it's important for the investment outlook, spending that is coming, especially in the manufacturing sector, but also in construction, where we have yet to see, after a rebound at the start of the year because of the weather, where we yet have to see a continuation of that trend. So very important. What we saw today will help policymakers find the confidence to cut, of course, in June. And one other thing that I want to alert you to is, of course, wage growth data that will come out in just over an hour, and that will be truly interesting to look at to determine not what happens in June, but what will happen afterward.
I was just about to ask you that, Jana. What happens after June 6th, of course? And I'm curious especially about the strategy here for the ECB. Is this you cut once, you open the floodgates to cutting consecutively, or do we see a kind of more Fed-like approach where it's cut once, wait a little, cut again, hold, like that kind of alternating approach? Is there any indication from the ECB what strategy is more lucrative?
Yeah, I mean, the ECB has been very, very clear in saying that any decisions, or all decisions really, will be taken on the basis of incoming data, on the basis of economic forecasts. And those forecasts are available on a quarterly basis. June will be the next set. September and December will be the ones to follow. And a lot of what we heard over the past couple of weeks suggests that that rhythm, that quarterly rhythm, is what a lot of policymakers are having in mind to get that confirmation, essentially, that they're on track, that inflation is coming down to the target, because what we will see over the next couple of months is very volatile, a very volatile trend. So inflation will go up, it will go down. It'll be difficult to read, and I just don't think they're in a terrible rush. And certainly what they don't want to do is make a mistake and ease too early, and have to go back and hike all over again. So caution is the word that they're probably going to use to describe it. So I would expect quarterly steps.
Jana, great stuff. Thank you very much indeed for updating us. Jana Randa joining us out of Frankfurt. You fold the Fed in to this whole story. How far can the ECB really go? It's going to want to be cautious. Various participants willing to tighten more if needed. That continues to be the line that stands out of the Fed minutes.
Yeah.
Imagine you're in a scenario where the ECB kind of does a cut and then the Fed starts maybe firming up the idea of it's going to hike. That is bad.
Right, and I take us back to the conversation we had earlier on this week with Mark Cudmore and others around the RBA and the RBNZ. Yeah. And there are central banks in various geographies that are not afraid to shine a light on their conversations of at least talking about whether hikes might be necessary again.
Well, suddenly guiding the markets seems to be more important, right? It kind of feels like the more clarity that they're being able to offer, they're almost offering too much clarity, where you're seeing so much division and so much spread out opinions that the markets don't know what to do with it. I think what's interesting, though, for the Federal Reserve that other economies don't have is that they have a massive blackout period. We had Ken Kencel talking about it right after July, August. They have their hands tied till December, and anything can happen, and they can't really do much about it.
Yep, the election will be coming up. That'll certainly be a factor as well. Difficult. I still come back to this idea that Powell sounded much more dovish than the minutes did, and I'm struggling to understand, therefore, where the centre of gravity is at the Fed and whether this risk of hikes is real. Because if it is, it changes the equation for so many central banks around the world.
And that seemed to be what spooked markets just a little yesterday, wasn't it? Have we been reading too much into Powell's ability to speak for the whole of the Fed and the whole of the FOMC? And maybe that's not the case. And so we continue to focus on individual voices, I suppose, from the Fed. I'll let you do this bit, Guy, because you're excited about this.
Ferrari is coming up. The Francine Lacroix is about to talk to the Ferrari CEO.
That's all you need to know, really.
I want to stay on set. I want to be part of this conversation. Anyway, I'm going to leave it to Fran. I'm really looking forward to hearing what he has to say. That conversation coming up in around 10 minutes' time. The market's going to focus on the Fed Nvidia debate today. We'll see how that one turns out as well. But Ferrari's coming up. Stay tuned. The Pulse is next.